So Google's parent company, Alphabet, just did something you almost never see in the tech world. It's issuing a 100-year bond, all to help fund one of the biggest spending sprees in corporate history. All right, let's get into this. Why on earth would a company that is literally swimming in cash borrow money that it doesn't have to pay back until our great-grandchildren are around? Well, it all comes down to the AI arms race. And that's the big question on everyone's mind, isn't it? Alphabet is the first major tech company to issue one of these century bonds since the dot-com bubble. It's a move that really forces you to ask some huge questions about the future of tech. So why the bold move? It's all about an absolutely colossal investment in AI. And we're not just talking a lot of money. We're talking about a planned $185 billion in capital expenditure just for this year. To put that into perspective, that's roughly double what they spent in total last year. It's just a staggering amount. So what even is a century bond? Well, think of it as a loan that doesn't have to be paid back in full for 100 years. They're incredibly rare, and they're usually reserved for institutions that feel, well, almost permanent. Like stable countries or giant industrial companies, not fast-moving tech firms. Now, on one hand, you could look at this as a massive vote of confidence in Alphabet's future. The market's reaction was pretty incredible, actually. So let's dig into the bull case for this century-long bet. The demand for these bonds was just off the charts. For the £1 billion worth of bonds they put up for sale, investors placed orders for nearly $10 billion. That means it was 10 times oversubscribed. It just shows you there's a huge appetite to lend money to Google for the long, long haul. And this points to something really interesting that analyst Lale Agoner brought up. She suggests this isn't just about Google. It signals a fundamental shift in how people see these companies. Investors are starting to view big tech not as risky, volatile bets, but as essential, permanent infrastructure, almost like a utility company. And look, this confidence isn't coming out of nowhere. Alphabet is a financial fortress, plain and simple. They have a war chest of over $126 billion in cash, a death grip on the search and cloud markets, and revenues that are breaking records. Their AA+ credit rating, it's one of the strongest you can find. But, and you knew there was a but coming, right? There is another side to this story, a much more cautious, maybe even ominous one, because history has some pretty stark warnings for companies that make these kinds of 100-year promises. Let's look at the bear case. To really get the risk here, you just have to look back at the last major tech company to try this, Motorola, way back in 1997. At the time, they were an absolute giant, a top 25 company in America. They issued this bond right at the absolute peak of their power, just before a really dramatic decline. Today, they've fallen all the way down to 232nd. And of course, the famous investor Michael Burry, the guy from The Big Short, he didn't miss this. He immediately drew that parallel, basically framing Alphabet's move not as a sign of strength, but as a potential historical echo, a titan hitting its peak right before a fall. And when you dig into the data, the picture gets even more complicated. You see, issuing a century bond is absolutely no guarantee of future success. For every Caterpillar or Cummins that went on to just crush the market, there's a Disney, a Ford, or a Motorola that ended up lagging way behind. It's really a 50-50 shot. This has led some market strategists to raise a big red flag. They see this as a classic sign of what they call market froth. The basic idea is that when one theme, in this case AI, gets so incredibly hot, investors start to do extreme things, like lending money to a tech company for 100 years. And that can be a signal that we're getting near a top. Okay, so we've got the bull case saying this is a sign of incredible strength, and the bear case firing off historical warnings. But what if the 100-year timeline, the very thing that makes this story so fascinating, is actually a total distraction from the real risk here? I mean, you'd think the number one concern for an investor would be, hey, is Google even going to be around in 2126 to pay me back, right? I mean, who knows if we'll even be using the internet then? It seems like a pretty reasonable fear. But here's where the kind of weird math of the bond market comes into play. There's a concept called duration. Think of it like this: it's a bond's effective payback period. Because you're getting interest payments the whole time, you get your money's worth back way before the final maturity date. And here is the absolute kicker. The actual duration of Alphabet's 100-year bond is less than 17 years. That's it. Because of that steady stream of interest payments, from an investor's point of view, it behaves much more like a conventional 40-year bond. And that brings us to the crucial point, The whole 100-year headline is basically a smokescreen. The real gamble here isn't about Alphabet surviving into the next century. It's about right now. It's about whether this massive, immediate $185 billion bet on AI will actually pay off and make it a winner over the next decade. And that question zooms us out to the biggest question of all, because Alphabet is not making this bet alone, not by a long shot. This is an industry-wide arms race on a scale we've just never seen before. Between now and 2029, the major tech companies are projected to spend nearly $3 trillion on AI infrastructure. The entire industry is going all in, building the foundations for this new age of artificial intelligence. You know, it feels a lot like past infrastructure booms, like the railroads in the 19th century. And if we go back to that idea of tech companies as infrastructure, well, history shows us that during these massive build-outs, the really big fortunes often weren't made by the companies laying down the tracks. They were made by the people who figured out how to use them. So the ultimate question this 100-year bond leaves us with is so much bigger than just Google. In this multi-trillion-dollar race to build the infrastructure of tomorrow, who's just building the pipes and who is going to be the one to truly capitalize on this new technological age? That is the question that will define the next century.